Hello and welcome to Options Guy TV. My name is Brian Overby, author of The Options Playbook, and your host for about the next 25 minutes here on Options Guy TV. All right, so retail earnings, that's the theme this week. We have Home Depot tomorrow. We have TJX, Target, Lowe's, all before the open on Wednesday. And Home Depot is before the open, I should mention that. And then we have Walmart, almost when people think of Walmart, their earnings conference call, a lot of people think of the entire economy when they talk about Walmart and what Walmart is doing. So always very good information that you receive on the consumer across the board. And the consumer is the big question mark, right? The consumer keeps spending and keeps the economy propped up. Everybody says that they don't like what's going on in the economy, but the consumer continues to spend. There's been a little bit of a drop off in that recently, so a little bit of mixed signals. So we're going to get a lot of clarity on that this week. I think the markets are the VIX trading right around 15, showing a lot of complacency in the marketplace. Odds of a rate hike have came down. They're now down to about 40%. Probability at the next Fed meeting that they're going to bump up the short-term interest rates. And so the market, I think we're going to learn a lot this week. I think this earnings report week is going to be huge because it is all about the consumer, starting with Home Depot tomorrow. Target, which is a surprising company, and that's the stock that I want to talk about today. They announced before the open on Wednesday. So let's run to the Trader Pro software. And we're going to start by looking at the chart of Target. And right now we have Target trading at 153.36. It is down a little bit on the day. I just screwed it up by hitting my little thing. Here's the strong move in Target. Period of consolidation right down here at the 186 level. And a very, there's a few red candles in there, but this is a nice ski slope if you want to look at it, to move all the way from 90 up to 158. Now, this gap is going to get interesting. Notice the bottom here is where that touch was before the stock made the move up, and now the big drop down. So 165. Let me see, right? Let's get a good picture of that one. Let's call it 168. 167.76 is right there. And it came back and touched that. I think we can get to that level. I think we can get back to this area before we get in another period of, I don't know, consolidation. But this is the strongest resistance area to the upside right now, is right at the 168 level. So heading into earnings, after a real strong move to the upside, you're going to get some retail news before that. You're going to hear from Home Depot, but a couple of Chinese companies are also announcing, and then we're going to get Lowe's in the morning on what? Yeah, we're going to be hearing a lot of stuff heading into that earnings report. Now, you could wait and you can enter this trade on Tuesday after you hear what's going on with Home Depot, because that can have not that they're in the same world, but it's just all about the consumer. And I think that's going to be a big part of this week's trading. But what I really wanted to do was sell a short spread, and I wanted to do it via a skip strike butterfly, but it's not really working. So I just wanted to share with you that I've already gone through and tried to figure that out going on 25 days. We could go to October and potentially do that, but that's a long way out on a skip strike butterfly around earnings. So I'm going to give you two trades. I'm going to look at the bullish case with a very inexpensive open wing butterfly. And then I'm actually going to look at selling something above, and it's just going to be a short spread. I'd prefer to do a skip strike, but there's just not enough premium in the option contracts that we're looking at in Target to make it really feasible. I can't get it done for big enough of a net credit. And they only have 2.5 point strikes in Target. So that also affects it too. But right here, I think it's going to have a real tough time getting through that level. And so I'm going to try to sell something right around the 168 level, and just do a pretty tight uh, short call spread. Okay, so now this is going to be a little bit contradictory in that I'm going to lean a little bit bullish by doing the open wing butterfly, but I'm also going to look at that short spread, thinking that the stock can't go much higher than 168. And I'll leave it up to you, but it's a strong move going into earnings. It could continue. Good signs from the consumer, and you could definitely see Target breaking towards that 168 level before it hits a little bit of resistance, at least on the chart wise. So here we are. Let's do the short term trade. They're going to announce on a Tuesday. Well, stock is at 153. Let's look at just going a little bit in the money, and we're going to buy this, go 5 points out and sell that. And then we're going to stop short here. So 165, this gets within our range. The expected move, this is 4 days. So the expected move is about $10. If you buy the most at the money call and the most at the money put, we're going to call that about $10. And so 162 is in play. That should be that's 25 delta here. Should be about a 20 delta somewhere in that range, but it's saying 25. That's fine. I'll accept that. So we got about a 20% chance of it getting up to this strike, which is going to be fine by us. $2.67 to do it should be cheaper than that, right? Here we go. I was going to say, I was thinking it was going to be closer to $1. Yep. 84 cents. So very inexpensive way to get bullish on Target going into earnings, sending it to the Trader Pro what if calculator. And I don't know, which one should we make the official paper trade? I'll leave this here. We can send it to the ticket, but here is very inexpensive way to get bullish on Target heading into earnings. Now, you definitely need the stock to go up. It's trading 84 cents from 157.50 on up. This is our profit and loss graph this Friday at this Friday's expiration. Here is the way it looks right now. If we put this trade on, here's the profit and loss graph. Vol comes off, get a lot of time decay. Then we approach this as expiration happens. From 165 on up, we can make $166 if we execute at that 84 cents. So got a good amount of upside anywhere above 165. The maximum we can make on the trade is going to be right at the middle strike, which is 162.50, and that looks like somewhere around $415. So a very easy way to make this to do this trade. And a lot of times when I look at skip strike butterfly, something that I want to get done for a net credit as an alternative to a short call spread, if that doesn't work out, it always seems to me that the open wing butterfly is going to be cheap. And it's more so that the out of the money options just don't have a lot of skew in them. So when you're buying that last wing, it's a fairly inexpensive trade. Now you need in the skip strike butterfly, when we're doing it, we're selling those wings, and you kind of want that volatility to be a little bit higher. But in the butterfly situation, we want it to be cheap. And in the, I should say, the standard butterfly or open wing butterfly, 87 cents is the trade. Okay, so now I'm not sure if I want to make this one the official paper trade, or we go out a little bit further in time. We got that one saved in the what if calculator. And we're going to go out. Let's look at, I like 25 days on when there's an earnings report. Normally, if you're just doing a normal short call spread without earnings or anything known in the expiration, I like to go out 45 days and sell it at about 20 days. But you're going to get such a pop in volatility right now, pull in volatility, that I don't mind doing a little bit shorter term expiration in this around the earnings. And if you get the earnings drop, then just close it out. So we're going to go a little bit out of the money. We're going to focus on the one standard deviation move, 18 delta right here, 142 strike. We'll sell this one. and we will buy this one. Man, this is, and yeah, I don't like the skewing here. 55 cents on a 5-point wide trade. Just nothing exciting. I don't like, I think we lean towards the bullish one. Now we're outside the range, 168. I like the trade. I just don't like the option pricing that's in it. 142 and 170, 55 at the mid, $1 wide bid-ask spread. You know what? I'll execute it though. I'm gonna go back. I'm gonna do the open wing butterfly as the paper trade. We're gonna send this to the what if calculator. Go out 25 days. I'll look at I'm gonna look at the 40-day one too. So stocks at 153, selling the 170, buying the 175, pulling it in for 55 cents. Net credit to the account. At 50 cents, you have $4.50 worth of risk, and you have the maximum profit potential of 50 cents on that trade. So it's not that exciting with the risk of the earnings report. Be more interested in doing a little bit after the report. So let's take this off now, and I wonder what I can get if I go out to October. Now, October, looking at a 1 standard deviation move. There we go. Okay, so now we could go all the way up to the 175 strike. Yeah, I think I'd be more interested in going just further out if I'm going to do this. So 175, 180. Let's look at hitting this and then buying this. 79, so not quite getting to that dollar. I like this one better though. I would rather sell the 172 and buy the 177.50. You got to add the 50 cents on there. Get it done for a net credit of 80, going 5 points wide, going out to the October 2nd. So this is the trade I'm going to put in, and we're going to watch it. I'm going to send this. I'd rather just go further out in time and deal with the earnings report and then trade accordingly after that earnings report. So send that to the ticket, 79 cents. All right, I'm just going to send this one. I'll give it a quick read back, but I'm not going to make this the official paper trade. Okay, so we're looking at a short call spread to get neutral to bearish on target heading into their earnings report. Looking at the October 2nd expiration, 46 days away. Target is down $1.37 on the day. They're announcing earnings on Wednesday morning before the open. We're going to look to sell the 172.50 strike call and buy the 177.50 strike call. Get this done for a net credit of 79 cents to the account. We'll leave it right at 79, and boom goes the dynamite. Order has been sent. Now let's go in and look at the what if. And let's grab the long butterfly. This is going to be the official paper trade in Target heading into earnings. 93 cents. We're up a nickel since we started. And let's send that. Let's go over to the trading page, options grid, pull up the August 21st expiration. Here's our trade, 1 by 2 by 1. 93 cents is the midpoint. I'll put it in at 90. That will be our target. And yeah, notice what I did there. That'll be our target. See how, yeah, there we go. Target 150. Okay, so Target right now is selling at $152.98. It's down $1.50 on the day. We're going to look at the nearest term expiration, the August 21st expiration, 4 days away. Target is announcing earnings on Wednesday before the open. We're going to look at doing an open wing butterfly to get bullish on Target at a very inexpensive cost. We're going to look to buy the 157 strike call, sell 2 of the 162.50 strike calls, and buy 1 of the 165 strike calls. We're going to do this 1 by 2 by 1, creating an open wing butterfly. We're going to look at the midpoint price of 93 cents and send it down to the trading floor at a limit price of 90 cents. And this will be the official paper trade for today. And we're going to send that to the trading floor. Boom goes the dynamite. Order has been sent. All right. Now, if you have any questions, last week we did a VIX trade, and we're going to ride that VIX trade heading into September expiration. I'm going to ride a little bit, going to get a little bit longer on the VIX too, going into the end of the month. I don't mind looking at doing an October expiration VIX trade too. We're just buying long premium. Premium is down. VIX is down. The VVIX is down below 100, which is the volatility of the VIX index. And that's so the VIX of the VIX is down below 100, which is uncommon. So that's at low levels. The actual spot index is at low levels. We're just going to buy some premium and see if there's some shenanigans that happen in September and October. And there usually is. And we're heading into obviously a very volatile period of the midterm elections. So we'll be getting news. It'll be interesting. Things will be filtering out. I think I think the VIX is too low at this point in time. And we're going to try to take advantage of an increase, a potential increase or spike in volatility. So last week on Wednesday, we looked at the long VIX trade using the September option contracts, if you want to go back and review that. And then at the end of the month, we're going to talk about looking at an October futures contracts in the VIX. And let me pop into here. All right, so we got a couple of good mornings. Let's go and pop them up. And I think, I don't mind looking at Home Depot. Home Depot is an interesting stock right now. Home Depot's got a huge valuation, though. And I didn't necessarily like the chart. There's nothing to discern. I mean, here's an area we're just trading right in this area where just Home Depot's trying to decide where it wants to go to next. Houses aren't really moving. Some people say, well, Home Depot benefits from that because that means they're remodeling, but they're not even really seeing that happen at this point in time. So I don't really have an opinion on where Home Depot may go to next. And if you are trading Home Depot at the 336 level, a little bit, the duopoly between Home Depot and Lowe's, trades at a decent valuation right now at 23. Well, past earnings, it's not too shabby in that aspect. But I think I would rather trade Lowe's. And I would want to do Lowe's a little bit lower PE. And they announced Wednesday before the open. I don't know. You guys want to throw a trade in on Lowe's, maybe? All right, let's look at Lowe's. Let's see what we got for some vol. August, 11 days out. We're at 57 vol. $215 stock. Credit's 5 cents. We need that. If we're going 2.5 points wide, we need that to be at least 20 cents or 25 cents is what we want it to be. If we're going to do the skip strike butterfly, that's what this is. So send that to the what if calculator. I'll just show it to you. I mean, maybe if we adjust this out a week, we're looking at August 28th. Maybe we go to September 4th. Let's see how big of a credit we get there. Now we're at 10 cents. If we can fill there. Why won't you let me switch? There's no 2.5 point strike. Yeah, this is so 10 cents. If you look at the September 18th expiration, if I can get that done for a net credit of 20 cents, I'm okay with this one. Okay, so we're going to send this to ticket. And I'm going to go out one more. Let's go to the 4th. So this is a potential. We could even move it down one strike. I don't know. That gets a little bit dangerous with Home Depot announcing tomorrow. Yeah, right there. We're at, if we can fill this at 20 cents, I don't mind this at all. The September, because we're 2.5 points wide. Send that one to the what if. Bringing in a net credit of 20 cents, 2.5 points wide. 2:30 is where we're okay. They're announcing on Wednesday. You got all day Thursday, all day Friday. I'd put this in. If I could fill this at a net credit of 20 cents, I'd be okay with it. So let's do a read back. I don't mind this trade in lows. But I got to get, and then there's no guarantee. If I can't get that 20, I need to get 20 cent net credit with the stock here at 215.20. So I don't want it to run up on me. The market is down actually quite a bit today, 1.5%. 215.20, 20 cent net credit. Here we go. Let's go over to the trading tab. We've got the September 4th expiration. It's in there. Yeah. Lowe's looking to announce earnings Wednesday before the open. We're going to do skip strike butterfly with the stock at 215. We're going to be selling the 227.50 strike, buying 2 of the 230 strikes, 2.5 points wide, and then skip the strike 232.50 and buy the 235. We're going to get this done for a net credit of 20 cents to the account. Right now it's showing that that's a little tough. But if we can get it filled close to that, we're going to need a little bit of a pop-up in the stock in order for that to happen. But I want to get at least a net credit of 20 cents. And boom goes the dynamite. Order has been sent. Okay, we got 3 of them today. Target is the most interesting to me. I think we're going to lean bullish on Target. We got a little bit more room for the upside. Have had a strong move, not a lot of chop in it, but I do think that can continue. Consumer sentiment from some of the credit card companies has been fairly decent. The consumer's still spending. And if we get some decent indications out of Home Depot, and then obviously Lowe's is going to be announcing on Wednesday morning also. So I think we're going to stay bullish a little bit on Target heading into this earnings report. And that's going to be it for this episode of Options Guy TV. We'll be back on Wednesday, and we'll be able to review all of these trades and trade them live. Thanks for stopping in, and we'll see you Wednesday.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.